Hey, good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joe Cusick with the Cusick Group Securities offered by MoneyBlock, where we want to take a look at the technical side of the market, looking at charts and option analysis to give you more transparency into the action. Now, with that being said, you're seeing the markets actually ticking behind me, and specifically, I want to take a look at two stocks. One has earnings and one had some unusual option activity. So let's take a look at it. We're going to start with Newmont Mining. Newmont has earnings after hours. It's currently trading at $37.43. As you can see, it's ticking right here at $37.43. It's up 42 cents today, or about 1.13%. You can see the open high low right here. Extremely high volume both on the stock and the options as you scroll through the statistics here. That's important. We want to have volume associated with anything that we're doing both on the stock and option side. Now, speaking of options, there are a few things that you can do to take a look at either whether it's probability of success or looking at the historical components of the price action of the underlying as well as the options. I like to start in the options section, and I'm actually going to take a look at how we actually generate the estimated move here on Newmont. Now, taking a look at Newmont trading at $37.43, the quickest way to see what the estimated move going into this earnings announcement is, go look at the straddle strangle markets. That's the straddle, which is the same strike front month. So this is the weekly February options. $37.50 calls are the at-the-money options. So you take the offers and you add those together. That's basically right there, right around, we're going to round it up to $1.50. Okay, and you have the 37 puts. That's the first strike out of the money put, and the 38 puts, first strike out of the money call. That's $1. They add those two together, that's $2.50. That means right now, going into this earnings event, they're pricing in the potential that Newmont could actually move after hours about $1.50 or until the expiration or end of this week, $1.50 or right around $1.25, excuse me, move being priced in just by looking at this straddle strangle market for Newmont. Now, historically, what has it done? Well, you take a look at the charts. This is giving you that transparency and looking at the price action. And as a matter of fact, if we scroll in here a little bit on the charts, you're going to see that we have a few moving averages here. And again, looking at the 150-day moving averages, they're converging on each other right now. And it's just hugging right along its 10-day moving average. So you have midterm support. That's the institutional support that I've talked about in the past on the 50-day moving average. We'll watch that one very closely because that's something that you want to hold. That's right around, if you look at it, that red line, 34.93 is going to be that support level we're going to watch. Now, the options are only pricing in this week around $1.25 move. So we're going to probably stay within that support level. But watch Newmont, especially if gold comes under pressure. Will Newmont come under pressure? Watch also the U.S. dollar. If the dollar starts to strengthen, that could put pressure on Newmont as well, outside of what we're going to have as far as earnings announcements tonight. We also want to take a look at another stock, Qualcomm. And I'm actually going to type in this symbol here, QCOM, that's Qualcomm. Qualcomm right now, today jumped up on my radar screen, saw that it was actually, let's see, QCOM was trading up today, and I apologize, we're having a little bit of a load issue here, but it was actually trading up today, and I'm going to log back in so I can speed up my current connection. But it was currently trading up today, and so we're going to watch this very closely because Qualcomm had some call activity. Now, I normally don't put a lot of stock in just call and put activity as far as it's concerned, but we did see some interesting activity, and you're going to see I'm going to actually pull this up real quick. Right here, all in the March weekly options, if you take a look, there was some interesting activity. It's actually about the quarterly options in March. If you scroll down, you're going to see, and I apologize, that should be Qualcomm. that we had some interesting activity on the 60 strike line in that expiration month. Now, Qualcomm is up right now 30 cents at 56.65. And this is why I love doing live. It really shows how sometimes, technology may not work as you like. Taking a look at the week 4 March expiration, scrolling down to the 60 strike line and the calls, you're going to see roughly right here, and I have to enable the rollovers. And I had to make the font a little bit bigger so all of you could see this, but I'm going to display the Greeks and I'll enable streaming. And I'm going to scroll down here, and on the 60 strike line, you're going to see, and I did not want the front month. So on the 60 strike line, you're going to see roughly about 2,800 right here. 2,800 of the $60 calls traded today. That's twice the open interest. That's a big pop. Now, they've already had earnings, and they beat earnings by a penny in January. They have a few conferences that are coming up, but handsets and telecommunications have been on the move to the upside. Let's see if Qualcomm is moving to the upside. With the stock basically trading at $56, you're talking about a $5 move. Now, between now and March expiration, if you look at the at-the-money strike, which is the 56.5, if we use our straddle strangle market, $1.70, $1.50, so that's $2.20, and then $1.28 and $1.25. So that's another, basically it's $5 being priced in on the straddle strangle market. Divide that by 2, that's $2.50. That would get you to the $58, almost $59 level, 59 and some change. That would be some measurable appreciation to the upside, or it could go down equally as much, $2.50 to the downside. But support's coming in at, and we'll check this real quick, at right around that 50-day moving average. So let's our 20-day moving average. So if we actually scroll in a little bit and move the chart over, you can see that Qualcomm has had quite a challenge to the downside. It had a gap. You see that its 50-day moving average is right up here. If we actually lay in a 20-day moving average, that's going to come in. If we scroll up, that is going to come in at, and again, this is the challenge of making my font so big for you. That 20-day moving average, which I'm going to change here, and I'm going to do just simple, is going to come in right below where the market's trading right here. So as a matter of fact, if you look over here to the right, that's coming in at 54.44, which is support. So you're going to use the 50-day moving average, which is resistance at 61 and some change, and you have support at the 20-day moving average of 54.44. So you got the market trading in between these moving averages. We want to see a test of basically resistance coming in right around this level, which was the basically the October lows at $60. Breach this and break it, boy, you could see some momentum to the upside for Qualcomm. All right, folks, that's our technical approach in taking a look at two stocks. One had earnings and one had unusual volume activity. We're going to work on perfecting all of this, but take an opportunity to take a look at all of the new offerings that we have on our premium toolbox offering here at MarketStream.live. And this is also where you can keep track of all the updated videos. Again, at MarketStream.live, there's a free 2-day premium service. You can kick the tires on all the tools and applications that we have to offer here at MarketStream. So till later this afternoon, when we will wrap up all the closing action, we'll see you at 4:30 Eastern Time here at MarketStream.live. Take care.